Hello students, welcome back to Finance 360. Myself Professor Sikal Talati, okay, teaching you the basics of accounts. Okay, for the next step we are now to the topic called golden principles. Okay, we have studied about the accounting rules, accounting systems, okay, accounting tactics, accounting terminologies. Now, next important topic here is how the accounts work on these rules. We have learned there are three types of accounts, right? Personal account, रियल अकाउंट एंड नॉमिनल अकाउंट ये हम लोग ने लास्ट लेक्चर में देखा है, लास्ट सेशन में देखा है. नाउ इन दिस सेशन वी आर टू टॉक अबाउट रूल्स अप्लाइड टू दिस अकाउंट. Account also follows some rules. Accounts also follow some guidelines. There are accounting standards. These accounting standards follow some rules. These rules are called golden rules, or you can also call as golden principles. Now, what are the golden principles for each type of account? First, if you see, the first type of account was known as personal account. So personal account golden rule is debit the receiver, credit the giver. Now what is meant by debit and credit? If you remind, in the previous session I talked to you, okay, every account has two aspects, two sides, two effects. I repeat, every account has two sides, two aspects, two effects. Two effects means one debit and one credit. Now, if there is any transaction which is related to personal account, like example Mr. Shah, okay, I said it's a personal account. So what will be the effect, debit or credit? Debit will be effective only when the person is the receiver, he will be debited, and if the person is the giver, then he will be credited. I take an example. Okay. Mr. Shah paid cash. Mr. Shah paid cash to Mr. D. That is an example. I repeat, Mr. Shah paid cash to Mr. B. Just an example. Okay. Now, who is paying to it? Mr. Shah is paying to it. And who is receiving to it? Mr. B is receiving to it. So, Mr. B will be debited. Mr. B will be debited and Mr. Shah will be credited. Mr. Shah will be credited. Why? Because Shah paid to B. So, B is the receiver and Shah is the giver. That way, the personal account rule is debit the receiver, credit the giver. I hope you understood this example. Second type of account what we have is real account. Under real account, what the rules are? Golden rules are for debit, what comes in, for credit, what goes out. Got it? Take an example. Purchase goods in cash. I purchase goods in cash. Now, in that case, goods and cash both are real account. So one effect should be coming, one effect should be going out. What will be coming out? Coming in will be the debit, what will be going out will be credit. Now what is the entry line? We purchase goods, so goods are coming in, so goods will be debited. And what is going out? Cash. Cash will be credited. Cash what goes out, goods what comes in. I hope this is clear with the real account. Okay. I clear the personal account, I clear the real account. Now get back to the last account. Third type of account is nominal account. Now what the rule applied for nominal account is? For nominal account, rule applied is debit all expenses and losses, credit all incomes and gains. Now if you say the certain losses, okay, sold goods at loss. I am selling the goods at a loss. Now goods is a real account, right now forget that. Okay, goods is a real account. What important is the goods are sold at a loss. You sold the goods, you incurred a loss. Okay, so loss will be debited. Loss will be debited because the effect is debit all expenses and losses. So if you are posting nominal entry of loss will be always debited into account. Loss will be always debited. Same like what you have posted here. B account will be debited, Shah account will be credited. Okay, goods account will be debited. Cash account will be credited. Like that example, loss happened, incurred, it will be debited. So loss account will be debited. If the same thing, if the goods are sold now, and take an example like profit. If the goods are now sold at a profit, so what a profit will be? Profit will be credited. Profit will be credited. Why? Credit all incomes and gains. You sold the goods at a profit, that means you gain. You gain means you earn a profit. That is what profit will be credited. So profit account credited, loss account debited. You can take an example like account Here goods account, cash account, Mr. B account, Mr. Shah account. This is what an example is that I showed to you just to explain you how the accounts will be affected based on the rules. So here it is again. All accounts work on the rules. That rules are called golden principles, or you can say as golden rules in a simpler way. So what the golden rules are? Repeat. For personal account, rules are debit if the person is receiver, credit if the person is a giver. We will spell like debit the receiver, credit the giver. Real account, golden rules will be debit. Okay, what comes if anything is coming in will be debited. Any assets, property, goods are coming, it will be debited. Any assets, property, if it is going out, it will be credited. Credit what goes out. Again I repeat, real account reading will be like debit what comes in, credit what goes out. Nominal account rules will be like debit all expenses and losses, credit all incomes and gains. These are what the rules have to be applied while posting any transaction into the journal, into your ledger, into your statement, subsidy book, wherever in the accounts. These are the rules. Based on these rules, we post the entries. I have given examples of those. Hope the golden rules are clear to you. Thank you.